Thank you all for joining. I hope you're all sitting back and relaxed. I hope you can tune in for the next 45 minutes with us. Welcome and thank you for joining another RegCentric webinar. This webinar is number 3 in our COVID-19 series and will cover the changes our Australian government is implementing for the finance industry on behalf of small business to assist the small business in this time of pressure in them running their business with cash flow. This session will build on some of the other impacts which have arisen financially from COVID-19 and the regulator's response, and we will focus on the submission data now required to be submitted by 130 lenders in Australia. With the agenda today, we'll cover off the SME Guarantee Scheme, data collection, reporting treatments and data utility, key reporting considerations, and at the end we'll do a little bit of Q&A. We will be working to the 45 minutes today, so we'll be finishing up the webinar at 1:15. For housekeeping, please ensure that you are muted on the line, and if you would like to make comments, please put them in to the right-hand side. There should be a box. You can actually put that comment in there, and the speaker will receive that during the seminar, and if they do not answer it during the seminar, we'll have some time at the end to do that. You can also vote for any particular questionnaires using a pop-up screen as well, and those will be presented to you by the presenter. Introducing our presenters for today, we welcome back Thomas Fillet, who is the founder of RegCentric and has delivered material in previous webinars from RegCentric. He has over a decade of extensive experience in providing consulting and implementation services across finance, risk management, compliance and audit functions at major and minor financial institutions across Europe, Asia and Australia. Thomas and the team continue to help all size lenders navigate complex data challenges as it pertains to reporting. We were also welcomed and joined by Robert Phillips. This is Robert's first webinar, and he's a principal consultant at RegCentric. Prior to joining RegCentric, Robert worked at APRA for over 10 years as Senior Manager in Data Analytics and IT. He is highly skilled in business process automation, data collections and reporting solutions, data governance and analytics. He also holds extensive business intelligence understanding and stakeholder and resource management. Robert will be conducting a majority of our webinar today. I would like now to pass over control to Thomas Fillet, who will continue on from our previous webinar.
Thank you, David. Today we'll start our presentation by taking a quick look at the recent economic response by the Australian government, and specifically taking the lens of how the SME Guarantee Scheme came about. On 30th of March of this year, the government announced the 130 billion JobKeeper payment to help keep Australians in jobs as we deal with the significant economic impact from the coronavirus. This brings the government's total support for the economy to 320 billion across the forward estimates, representing 16.4% of annual GDP. Now, 40 billion of that has been allocated towards the SME Guarantee Scheme, which is what we will be talking about today. And there's a further 32 billion support package for SME employers directly. At the same time, APRA, RBA, ASIC and the Treasury are also coming up with coordinated measures in order to promote financial system stability and resilience in the economy. And that's happening through the Council of Financial Regulators. The Australian government's stimulus is targeted at supporting both individuals and households, as well as businesses and the flow of credit in the domestic economy. This means that the RBA and APRA have come up with ways to encourage lending into the economy, especially to the small and medium enterprise segment. From RBA, the announcement of 90 billion in funding facility at a reduced rate of 0.25% allows essentially funding at a lower cost base for the financial institutions. APRA has made various announcements, including reduced capital expectations for banks and delaying and adapting their 2020 supervision agenda to prioritize the COVID-19 response. We have highlighted this extensively in our last webinar on APRA regulatory activities under COVID-19. So in case you have missed that, I encourage you to get a look at the video that's up on our website. So for this session, we will be focusing on the new data collection that was introduced last Friday by APRA in support of the government's SME Guarantee Scheme. And I will pass over to Robert, who will do a deep dive into that new reporting form.
Thank you, Thomas. So before we take a deep dive into the reporting standard, we will just take a quick look at the scheme. The scheme will support $40 billion worth of new lending, including sole trader and not-for-profits. The idea behind the scheme is really, as we said before, to keep the flow of credit into the economy. Under the scheme, the government will guarantee 50% of the new loan issued by the eligible lenders to SME. The scheme will enhance the lenders' willingness and ability to provide credit, supporting many otherwise viable SME to access vital funding to get through the impact of coronavirus. The scheme will be available for the new loans made by the participating lenders until the 30th of September 2020. So what we're highlighting here is what forms a policy published by Treasury on the 8th of April. But simply, these policies are the driver for the design of the APRA new reporting standards. Generally, I take people through the new reporting standards in the grand scheme of regulatory program. The introduction of the new standards actually takes time. For example, EFS was initiated back in 2016, around there, while I was still at APRA. It only came out for public consultations a year later, and the establishment and implementation of the standard is ongoing to this day. In response to pandemic, we can see that this standard has been actually established in an accelerated time frame. A lot of shortcut has been taken, including public consultations. So it's a good case study for us to understand how the new reporting standard is established and how it takes shape into a formal collection. I will now introduce you to the process which links policy to the data collection, what we call a regulatory machinery wheel. Regulatory reporting and collection is a never-ending cycle. So it is always changing based on the number of factors. So looking at the process, so it generally goes like this. Starting at the top left, you have government announcements, the new legislation. In this case, it's about SME Guarantee Scheme. This then leads into Treasury having to publish a policy in line with that legislation, as we highlighted in the previous slide. Now, that policy is the primary requirement for APRA to action. APRA then, on behalf of the whole of government, will have to come up with the ways to ensure that their regulated entities are in line with the new legislation, so they form a reporting standard. One of the first things they generally do before coming up with a new standard is that they will have a look at the established standards and collections. If they find out that they already have the data to support the new legislation, they will not introduce a new collection. In this case, they don't have it, and hence you got a new standard and new collection. The reporting standard enables APRA to then implement the formal collection process. This step is generally about APRA taking the regulatory standard and putting it into a formalized collection. For APRA, it's about forming a reporting form, ARF, and then submission through D2A. Once the data collection started, APRA then feeds this data back to various government agencies. Government agency then use the data to form the basis of the decision making and actions. So let's take a deep dive into the standard and see how it fits into the regulatory machinery. The Treasury established their policy on the 8th of April. Then it took APRA until 17th of April to publish the new standard. Funnily enough, I found out that the shell of the new form was in Treasury policy that was published a couple of weeks before APRA. The standard includes two new forms. The first one is 920.0, is at the portfolio level, and 920.1 is at the loan details level. Notable points on the standard: it is established in alignment with the EFS definition, specifically speaking ARS 701. So, which also means that you can find your definition in the guidance of RPG 701. So this is one of those times where I would like to stress that EFS really was the foundation for the new standard APRA introduced in the future. So more or less it means that you need to get EFS implementation right and reusable for future returns such as this. Some of the general other logistics here, the collection is a domestic basis, book basis. It is collected through D2A. It's a weekly return submission. First submission is due on the 1st of May. You have 10 business days to prepare for the reporting. So going back to our regulatory machinery wheel, we can see how APRA then took it from Treasury and established their own reporting standard, which we call it, they call it ARS 920. And this then takes them into a next implementation phase to form a formal collection. So let's take a look at the two new forms in detail. Here is ARF 920.0. Looking through this, we can see that it is to be reported weekly on a domestic consolidation basis. Our understanding of the return is that the whole driver behind the collection is the borrower accepted commitment. What does that mean? APRA is asking you to report on limit amount and the number of facilities once the borrower accepted commitment has been made. And within the standard, APRA is telling you to go and have a look at the definition of borrower accepted commitment in RPG 701. And indirectly, really, they are telling you to make sure that the implementation of this new return is in line with the EFS collection. When you see such items such as loan approved or loan approved with director/personal guarantee, it means that approval is based upon the date you receive the borrower accepted commitment. The other notable points are there's two sections here. The first one is portfolio to date, and the second one is a portfolio asset at the end of the current period. In our opinion, this does create slight confusion. The first section is really like a stock of your loans. So they wanted to know, not surprisingly enough, the count of facilities. And same at EFS, they only want to know facility to be counted once. So watch out and make sure when you treat those split loan facility, and you make sure you're counting them only once. And remember, if you look at the form, the count is throughout the whole return. Also, another note is that in this section, you have guarantee claims and guarantee claims paid, which must include claims that have been made in the prior periods, not just in the week. In section 2, it's all for the active account at the end of reporting period. APRA wants to know the number of facilities and the amount for credit outstanding for all active accounts. The unused credit, where APRA simplified the definition slightly here by outlining credit limit minus credit outstanding, as well as the total number of facilities for the and amount for the in-pay as per your in-pay policy. We find some confusion here with the weighted average interest though. On the form, it says weighted average interest of the new obligation, which kind of leads us into thinking to only include a new loan or generated within the week. But then in the reporting standards for section 2, this is contradicted. It say all accounts that are active at the end of the reporting period. So we think we need clarification from APRA on this. We do have a suggestion though. Don't collect the weighted average here. It's better suited to the next form, which is ARF 920.1. ARF 920.1 is a bit more straightforward in terms of the structure. One table with individual loan to be reported here. But a few things to note, as in the first one, it is to be reported on a weekly basis at the domestic consolidation level. Again, it's all about borrower accepted commitment. So when they say approval date, it means borrower accepted date. This form is slightly different to the other normal APRA collections. as in saying that the form is asking you to report the loans with the customer information. You must then make sure your source systems as well as your reporting system must be able to capture and report on the customer names, ABN, the guarantor names, which is a full name for individual and the name registered with ASIC for legal entities. We don't exactly know though how APRA wants a guarantor when you have more than one. From my experience, how APRA would like to receive the information, I say put the names with the comma separations. As I said before, we think instead of collecting a weighted average interest on the ERF 920.0, the improvement idea from us is really put the interest rate on this form, since this form is already at the low level. So we are almost there with our view. And so let's take a look at what they would like to do when they get the data. Speaking in terms of APRA, as per the area of concern, they generally like to look at the data from the lens of prudential purpose. And remember also, APRA is the main distributor of the data to the other agency. So the data generally go out to RBA, ABS, ASIC, Treasury. So yeah, so once they get the data from the APRA point of view, it goes into the prudential internal process, and that forms part of the prudential regulatory activities. The other interesting to note is also that within the Treasury policy, they have highlighted a few things. One of the things is at their discretion, they may publish the data at the aggregated level. So my advice is please pay attention to your reports. Also check with APRA if you need to revise or resubmit, because your data may become public one day. You will want to get your data right, and you don't want to get into trouble later on down the track. The policy also did mention a website or a portal of some sort, if they can develop it for the data, for this collection of the data. So next, let's taking a look back at our regulatory wheel now. So it's actually quite in the full circle. There's a lot of details we just go through very quickly there. So summarizing what we just learned, we can see our completed wheel here, starting with the SME legislation that came into effect 8th of April. And then APRA coming out with the reporting standards on the 17th of April. And you got then the report collection ND2A, which will be the first collection, 1 May. And it will be weekly return. And then the data, the feed will be going back to the other agency, other governments once they get the data. Few things to note. Once the data reach the government or the other agency, based on the analysis, what they've done, they may make minor amendments either to the scheme or the legislation or the policy from the Treasury or the APRA reporting standards if they see gaps or if they see area of errors, or even the collection within the D2A, if they might have a collection breakdown within that. So what's trying to stress here is that this kind of activity is never ending. It always going to be continuously tweaked, and it will be ongoing for a while. So yeah, there's a lot of information. So let's see if we can summarize and find out some takeaway from all of this. Data is to be reported at the weekly interval. So, and to be reported by BD10. It's a bit confusing for us because we are normally used to the monthly reporting and monthly snapshot. So we need to get ourselves into the weekly rhythm. And the collection will be likely to go on for the next 3 years at least, because so my advice is that automate your process as much as possible. You don't want to be spending so much manual effort each week. You need to be careful in impact assessments on your existing returns, such as EFS 720 series, 740 series, or even other APRA returns like 112, 220 series, 223, 230s, and so on. The first collection is due, like I said before, 1st of May, so not much time. For the end of period is 17th of April. You will have to include loans that have been made on or after March 23rd. That is like 4 weeks worth of data. So the first, in terms of volume, the first submission may be quite large. The standard has the same quality and control requirements as per other APRA collection. And APRA is all about assurance of the completeness and reliability of the data. So all the information must be subject to process control, internal reviews and authorizations, as well as the audit requirements, potentially linking to APS 310 or RS 710 or RSEs. Another thing is privacy is also a concern, since you are including name, APNs, and guarantors. So make sure you have a protection and access controls of the sensitive data. At this point in time, we cannot see the taxonomy or the data validation that has already published by APRA, but watch this space, it will come. And the final note here to stress here is that we think there will be further communications to be made by APRA in the collection to clarify certain things, maybe in a FAQ or some kind of general announcement, or even a guidance paper. So with that, I will pass the control back to Thomas and David, and we address any questions you may have. Thank you.
That's great, Rob. Thank you for that. We're a little bit ahead of time, which is nice. So I might just ask Thomas if there's any questions there that have come in from the submission box.
Yeah, we have a few, and thanks for those questions. First one is, and maybe that one is for you, Robert. Do you think that D2A will be able to handle the volume of the submissions?
So just my experience with D2A, especially on the ARF 920.1, which is at the loan level. So D2A does struggle if you actually try to submit over 20,000 or so of records. So the worry probably is more in the first submissions, because you'll be looking at 4 weeks worth of data for the first collection. And then consequent weeks will be just for the week, so I'm not sure it will be that many. So yeah, D2A might struggle, so that's one thing to watch out for.
All right. Another question is whether the 920 collection is done on a best efforts basis or not.
The question, the answer is always yes and no in these kind of things, because since we are in the crisis times, they do want the data to come in through to the government fairly quickly. So the Treasury policy, for example, has the audit reference in there. APRA doesn't actually have specific mentions of the audit requirement, but they do have the strong statements about the quality and control as per other collection. So I wouldn't be surprised if they will, all of these will become subject to the audit.
Then a specific question on ARF 920.1. What is the loan identifier? Is that an APRA specified unique number?
Generally, with these kind of things, APRA just want some sort of unique identifier. So in the guidance, they probably will even say your internal identifier that you use. So if you want to talk to the database people, even a primary key will do, but as long as it's unique, that's generally what they accept. They do say internal identifier, so use that.
All right, great. Yeah, we haven't had more questions come in. Oh, no, there we go. Just one popped up. In terms of ARF 920.0, if in section 1.1 loans approved, if it includes loan approved with a director guarantee. So I don't know if it's worth navigating back to the actual form in the slides. So I think the question here is you have 1.1, which is kind of total loans approved, and then you have 1.2 loans approved with direct or personal guarantee. So I guess the question is whether or not 1.2 in this is an of which line item, so that the loans approved is the total, whereas the loans approved with a direct or personal guarantee is a subset of that number. Do you have an immediate answer to that, Robert?
So the reporting guideline doesn't actually say it's a subset, but it is actually, given that loan approved is pretty much a summary of all the things. So it is 1.2 is almost like a of which really.
Yeah, and I guess maybe that goes back to your point, Robert, earlier that I mean, there's been a very, very short time frame for the regulator to issue the reporting standard, and it does look like, from a design perspective of the actual return, maybe slightly different than what we're used to. In particular, this question we would have probably otherwise had an of which item rather than, I guess now a little bit more ambiguous description of the line item. Another question that just came in is whether APRA will release special capital treatment on the scheme. Maybe I can answer that one. So APRA has, as part of a previous announcement, basically indicated that the guarantee, which covers 50% of unsecured portion by the Australian government, can be treated as an eligible guarantee from a capital relief perspective. So it is an eligible collateral. It is possible that they might give more guidance, but I think, I guess they've already given some guidance in that space from a capital perspective. All right, the questions are coming in more quickly now, so thanks for that. Would there be any cross-form validations by end of month, for example, with other EFS returns, even though these are weekly returns?
It is very likely. Right now, I think they are still working on the validation. One of the things to know with APRA is that they do have a capability to introduce what we call the dynamic rules. So when they start seeing the data and then they start seeing the gaps and they want to plug the gap, they generally can switch on the new rules within the hour. So most likely when there are weeks that align with your monthly, they will be likely to introduce some of the validation rules. At this point in time, they haven't published anything just yet.
All right. Thanks for that, Robert. I haven't seen any new questions pop up in the meanwhile. So I think we can actually conclude the seminar or the webinar a little bit earlier today. In case you do have a follow-up question later down the track, our contact details are up here on the screen. So please feel free to reach out directly to us. With that, we can conclude the webinar. Thank you, Robert. That was very insightful, and we hope to see you next time as well.